Hello everybody, good morning. It's almost 9 o'clock in the morning here. It's the 14th of November. What I'm going to do today is kind of go through some key levels that we have on the S&P that have been created by this bear market that we've been in throughout the year. So this is mostly an educational video, just to kind of look at these important levels that have been created and just determining what kind of reaction we would expect to see as we approach, either levels above us and below us. So let me go ahead and kind of get into things before I get into all of this. This is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your risk, doing your own research, and this is just my opinion on the market. So this is, again, just an educational video. I'm going to move on into the S&P here. So, of course, I do have my WaveMaster indicator on here, and I'm looking at the daily time frame, which, as you can see on the daily time frame, we haven't had a solid buy signal at all throughout the year. So that's kind of important. This is just a side note. So what I'm going to do is just kind of talk through how I look for important support and resistance levels. Okay, so first off, a couple things that I look for. I'm always going to be looking for things like I'm going to be looking for areas where we've got multiple areas where we have had a reaction. So this is kind of that one of those areas right here. And just looking at it, you can see we had a lot of support here, a lot of resistance here. Again, we had some support here. We had some support here. We had some resistance here. We also had some resistance as we broke through back here in late September. So this is what I would refer to as a key level. And then what I can also then do is I can get my crosshairs lined up here as close as possible to this area. I'm just going to kind of hit my my Alt-H on the keyboard just to get that line put in that exact place. And on here, and again, this is close to the S&P 500. It's going to be at about 39.11. We'll call it 39.10. This area right here is an area of extreme interest, and you can also see that's where we had our last rejection from. We had a good pullback for a few days, and then of course it looks like we're moving a little bit higher. So where's the next level above us where we would expect there to be some resistance? Okay, so again, this is not taking Elliott wave theory into account. This isn't taking any Fibonacci levels into account or anything like that. This is just simply looking at the candles, trying to find the confluence. So again, what I'm doing here is I'm scanning and I'm saying, okay, we've got a wick here, we've got a wick here, some candle body closures here, candle body closures here, candle body closures here. Looking left, we have candle body closures here. So this is going to be another one of those levels. And so in addition to the candle body closures where we have support in these areas, we also have some resistance that we had here. This was one of the last spikes up before we had a major move down. So there's going to be a very important area of resistance, and that's going to be at about 41. We'll call it 41.50. It's pretty close. 41.4270 is where I happen to put it, but it's going to be right there around 41.50. Are there any levels on an intraday level that are important as well? Well, I'll get there. I always start at the daily time frame and I work my way down, because the daily time frames, those are the most important ones where you want to take a look and pay attention to those. What I'm also going to do is I'm going to look up here. This is another area. Again, candle body closures here, candle body closures here. We had a wick here. It tried to push down, but it got absorbed. And again, we have a little more of support here, lots of resistance here, and then final resistance right here. So I'm going to mark this as well, and that again is also going to be at about 43.08, 43.10. So those are the three levels that I'm most interested in right now, keeping in mind we're going to have a level down below, and that level is just looking left. It's probably going to be right here at about 37.50. So that's going to be the level down below that we're going to be paying attention to. So now that we have two levels above and two levels below, let's drill down just a little bit and see if we can find similar confluence on lower time frames. So this SPX 500 USD, it trades about the same as the ES. That's the S&P 500 mini futures trades, but it's more in line with what the actual index price is. So just keeping that in mind as we drill down into this. So what I'm going to do, I'm going to go down to a 4-hour time frame. And when I start to put some of my levels in here, I'm going to change the color because I know that red is going to be my daily time frame. And I want to change the color a little bit to show that we're drilling down and that whatever level I put on here is going to be closer to more intraday time frame versus your higher time frame. All right, so again, looking at this, I can see a couple different things just, without even, drilling down too much. I can see I've got a little bit of an intraday level right here, and that's going to be at about 37.20. Okay, and I'm just going to kind of start down and move my way up. First thing I'm going to do is I'm going to change my color. I'm going to change this to orange. And kind of moving my way up here, looking to see areas of confluence. Here is another one. Now, you wouldn't know it by looking right here, but if you look left, we've got resistance here, and resistance here. Chances are pretty good what we're going to see is we're going to see areas of confluence if I move left. So again, we found a little bit of support here. It had some resistance here, some support, a little bit of resistance, a little support here. So this is a good solid level. And that, obviously it's right around the 3,800 psychological level. So we would kind of expect that. So let's go ahead and just keep on moving. I see an area right here as well, which is right near 3,850. So not only do we have a level below us, so if this level gets breached, chances are pretty good. And again, this kind of goes into options trading as well. If that 3911 level gets breached, well, chances are pretty good we're going to hit this level and we're going to hit this level, right? As each one gets breached, chances are good the next level is going to get hit. So if you're playing options, and again, we're looking at intraday, if you're playing options, there are ways to do that where you can take profit as it hits those levels. I did talk about that a little bit in the video I did last night, which was, a little unconventional, but I hope it got the point across. So now here we are, right? So we've got two intraday levels, and I'll call them intraday levels, but it's still like, they're 4-hour time frames. So I'm not looking at like a 5 or a 15-minute time frame. Obviously, we can do that, but the chart tends to get really, really messy, and then it's really only usable on a time frame that's like, a 5-minute or a 15-minute time frame. So let's go ahead and move on up. We have an important level right here, and we almost butted up against it. This would have been back here on, was that Friday? Yes. So Friday, we almost hit that level, and that's, here at about 4,008. So the S&P 500 poked through 4,000. It didn't really get through it too far, but we've got that important level right here. And again, you can look left and you can see resistance here, a little bit of clustered support here. We had some support here, resistance, push through, hit that level, then we fell, we broke this level, and then of course we hit our key level right here. We already talked about that where we had some support. Let me go ahead and zoom out just a little bit more, and I can see more support and resistance levels right here, and that's going to be about 47, we'll call it 40.75. Okay, we had support here, resistance here, support 3 times here, it would push through, support, broke, went to the next level. So same thing right here. We broke up, we found some support here, but we hit that key level next, right? So we have that level there to contend with. And one more level above, we're going to go right up here to this key level. And this is, again, on a 4-hour time frame. We have some resistance here, support here. This would be a major pivot top that we had up here at the end of May. So, we're going back quite a ways looking at this on these 4-hour time frames. This also includes that entire push up through the entire month of July and the first half of August. So these are important levels to pay attention to because it does encompass the majority of the year. This goes all the way, now we're looking all the way back to the beginning of May through now here in mid-November. So we've got key levels here. And just in case anybody is curious, we can go down to even lower time frames. If you wanted to try and find key levels on even an hourly time frame, you can certainly do that. And I'll look to see here if I can find anything meaningful on an hourly time frame. Potentially right here, there's going to be a level. So I'll just go ahead and throw this in right here. And of course, I'm going to change my color one more time. And what I tend to do is I tend to work, with the defaults, the colors that are default, and work my way from the left to the right. So the further to the right that I go, the lower the time frame is, just to keep things simple. And again, this is a key level here because we've got some support here, some resistance. Right here's some resistance. We had some resistance here. And then, we just blasted through that level. We hit this key level, which caused a little bit of a stall. But then we kind of gravitated up and we're getting close to this level, which I do believe is probably going to get tapped before we get any kind of like a meaningful retrace. So, outside of that, you probably can find maybe a level right here at 39.61. I'm not going to mark it. But the next level would be right around here. And again, this happens to be at about 41.10. And you can see what I'm talking about. If you're looking at, say, a daily time frame, it's going to be really hard to, really do anything super actionable with this. The lower you get in your time frame, the more you have to rely on that time frame to do any kind of trading. So looking here at a 15-minute time frame, we had a key level right here that we found some support at. And then, here's a level here broke through, a level here broke through, but it went straight to the next key level. And now that it has kind of moved up and out of there, again, chances are pretty good it's going to get to this key level. Now, the reaction there is going to be really what determines where the market's going to go from there. Am I expecting it to break through? I think it's very possible that it can break through. And of course, if it does break through, the next levels above here to be looking at is going to be 40.77, 41.10, which again is our 4-hour level. And then we've got, the 4-hour levels here at 40.77. And then we've got our, we've got our 1-hour level here at about 41.10. And then 41.42 is that next key level. So the big question is, over the next couple days, are we going to see this push up here to 41.50 before we see that meaningful retrace? Or is the move here done? Well, we're going to find out. We're going to find out over the next couple days. What I will say here really quickly is, we've got OPEX on Thursday. Lots of economic events are going to be happening this week. So I would expect that there's going to be a decent amount of volatility this week. But do not be surprised. Okay? Do not be surprised because the highest open interest call for the November 18th expiration as of Friday at close was the 4,000 call. Okay, so the 4,000 call had the most open interest for options expiration. So the chances of us expiring above that are actually not that great because of that open interest. Right now, from a dollar value, what is the actual dollar value on options for OPEX, right? So this is actually what are going to be expiring on Friday morning, right? Not Friday afternoon. OPEX, those options expire on Friday morning. So they stop trading at 4 p.m. on Thursday, market close, and they expire on Friday morning. Okay, so there is 52% of dollar value in calls and 47% dollar value in puts, with the highest open interest is on the call side at 4,000, right? So there's about $2.2 million in the $4,000 calls right now, or sorry, not the 4,000 calls on SPX at this point in time. So if we do see a push up, I would very much expect there to be a pullback either at or below 4,000. Now, keeping in mind, the highest open interest put is at 3,200. So are we going to go all the way down to 3,200? I very much doubt it, that we're going to get all the way down to 3,200 this week. Chances of that happening are very, very, very small. But the chances of us breaking up above 4,000 this week, it's not looking super great. Now, next week, so for November 25th, the highest open interest on the call side is at the 4,075 call. So that's going to be, right up here. So Are we just going to kind of grind sideways this week because, again, it's OPEX week, and maybe it's going to be a non-event. We just maybe kind of grind sideways, and then next week we move up just a little bit. We'll have to kind of wait and see. I'm looking at all of these options, and just in case you're interested in this, we've been kind of working on creating a slightly different, unconventional way of calculating max pain on options, and that's something that we've been working on. We call it the Love Shack. It's just the name that we gave it, because we take a look not just at a single expiration, but we take a look at the expirations for the entire week, and then we take a look at the expirations for the next 4 Fridays, which are important to pay attention to. So we take a look at all of that and kind of try and make an educated guess on where we think the market's going to go. Based on what I see here, all of the money right now is in calls, right? Even though there's open interest that's in excess in puts, the money is in calls right now. So just for reiteration, on Friday, for the November 18th, so that's for OPEX, $73 million were sitting in calls, while $66 million were sitting in puts. Now, the big money typically is in those OPEX expirations. But if we take a look at November 25th, which is the following Friday, $5.3 million are in calls right now, but only $651,000 are in puts. And then for December 2nd, $4.5 million are in calls, while $784,000 are in puts. And then for December 9th, $3.4 million are in calls, and $575,000 are in puts. So right now, the money is being given to people that have calls, right? That's where the money is flowing. But the open interest is heavily bearish, right? So for OPEX, 62% are in puts, 38% are in calls. But at the same time, the dollar value is flipped, and 52% of the dollar value is in calls, while only 47% are in puts. So are we going to level out this week and next week and so on and so forth? Or are we just going to continue that slow grind up? We'll have to take that one day at a time. I did have a request to take a look at Cardano and Doge. So I'm going to go ahead and do that. I'm going to spend about the next 4 minutes looking at these. I love Cardano. And I have been looking to, I'm going to remove this. We exited out of that position. I've been talking about Cardano getting down to about 30 cents. I've been talking about that for a while. And I'm actually going to get Cardano on Binance here because there's more history. Okay, so, looking at this right here, just a couple things I'll make note of. I was talking about this wedge. We did a back test of that wedge and we went lower. We are going to have some support that's been created by this right here. So just be ready for that. Again, from looking down here at the bottom, right? So if we've got a 1, 2, 3, 4, 5 to finish that move, we would be correcting the entire move. So I've been talking about Cardano getting down to 30 cents for quite some time. And I do believe that we're probably going to get there. Let me put this on log scale because we've got, a really interesting chart here. Now, getting down to this 30 cents isn't going to be the bottom. Just for the record, I don't believe that it is. What I think we're in the middle of creating here is, we'll call it an A, and then we're going to go up for the B, find some resistance here, and then we'll probably go down for the C, which might go down to 23 cents. It might go down to 12 cents. It might take a while to get there, okay? If we go from 30 cents up here to $1.20, because this is where our major resistance would be, right here at about $1.20, that would be going up 400%, 300%, right? Yeah, that'd be going up 400%. Roughly. No, sorry about that. My math is off here. It's 300% that we would be going up. Let me just go ahead and put this on here to make sure that so that'd be about 300% we would be going up. And, from there, I think we're probably going to come down. And this is going to be what I would refer to, again, as sort of a generational buying opportunity, right? You've got a lot of people right now that are saying, sell your crypto, get everything off of exchanges, nothing is safe. And usually these are times where you should be buying. Because when everybody is afraid that's when you should start getting a little confident. And again, looking here at the daily time frame, we've got our red wave and our white wave that's all in oversold. The yellow wave is down there and oversold, and the green wave is creating some bullish divergence. So if we do go down to 30 cents, I'll buy a little bit more. I've already bought as much as I'm willing to buy, but taking that from where we're at here at about 30 cents to about $1.20 over the next, at least the next 6 to 9 months, roughly, when I think we're probably going to get that move, similar to what I believe we're going to get for the S&P 500. Just for reiteration, I do believe that's still the case. We're going to get a good rally here, and it's probably going to last until at least April, maybe June, and then for the rest of the year and potentially into 2024, I think we're going to see a continued move down. But for right now, I think we are close to a bottom. Now, just taking a look at Doge. Let's see here. I want to take a look at Doge. Do I want to use it on Binance? Let's see here what kind of history we've got on Binance. It looks okay. All right. So, just for the record, we were buying Doge when it was, kind of moving sideways, right? It was still under a fraction of a penny, and everybody was, not talking about it. Again, everybody was, all doom and gloom, and we're going to, see crypto just continue to bleed and go to zero. And I was like, Doge is just kind of moving sideways here. And so because of that, I want to try and take advantage of a good buying opportunity. And I mean, I did the same thing with Shiba Inu as well. It exploded. But, where we're at now, I mean, just kind of take a look at this, right? We had this 5 cents area, which, this is where a lot of the crazies were getting in, right? So I got a phone call from a good friend of mine, and he said, I think I should buy Doge because, my friend bought it, and he's shown me all these gains that he's making. And I was like, yeah, it could probably go higher, but, just be careful because, I mean, it's already gone up, 2,400%. How much higher is it going to go? Well, he bought here, and he wrote it all the way up here. I was like, you probably should start to sell that. It went up 1,000%, even from 5 cents, right? It went up 1,000%. And, I was telling everybody, like, hey, when Elon Musk goes on Saturday Night Live, you need to get out. And it just so happens that was the top, right? And to get out and being able to accumulate, I mean, that's a great opportunity for accumulation. If you had patience and you waited, being able to get back in at 5 cents was a great opportunity. Would I buy it here? Probably not. Not that I don't believe in Doge, but I believe in buying something that I believe is creating a bottom, has bottomed, and it has a good risk to reward. And due to the fact that this is, trading at like 8.6 cents, what's your downside on this, right? Are you willing to drop 43% of value? And what are you looking at for the upside? But are you willing to lose 43% to buy here? I mean, I know I'm not. Even if I were to kind of drill down, looking at a 4-hour time frame and doing a stop loss down here, what's your risk profile on that? Are you willing to lose 18, almost 19% by putting a stop loss here at these lows? I mean, that's not a risk profile that I like to take. I don't like to lose 18, 20, 25% on a trade. Granted, I guess what I'll say is I kind of let that happen to options every once in a while, but options are a little different. My risk profile on options is a lot different than it is like on equities. Like if I were to buy Doge, certainly if you're talking about getting it on leverage, you're going to have an even tighter stop, because even if you're doing 2x leverage and you put a stop loss down here at 2x leverage, you're losing basically 38%. That's significant. And that's only on 2x leverage. I mean, raise your hand if you do over 5x leverage when you're doing any kind of leverage trading, and I'm sure that almost all of you are going to raise your hand. I see too many people doing 5x, 10x, 20x, 50x leverage. Your stop loss has to be so small when you do something like that, unless you have a really, really great opportunity where the price is just kind of like moving sideways. It looks like it's bottomed. You have a good buy signal. When you have all of these things mixed together, then you can increase the leverage a little bit. But make sure that you focus not on what you can make, but focus on what you can lose, because time and time again, that is the most important thing that you need to pay attention to whenever you're trading. Focus more on what you can lose versus what you can gain. So if you're taking a trade, where is your stop loss? How much are you going to lose if you hit that stop loss? Don't focus on the fact that, going back out here to the daily, if you're looking at this and saying, yeah, Doge is going to go back to all-time highs, don't focus on the fact that you could potentially make 750%. No, don't focus on that. You have to focus on the fact that you can lose and might lose and probably will lose 18% non-leveraged. That's important to pay attention to. All right, guys, that's all that I'm going to get into today. Hopefully this video did help you. If it did help you in any way, shape, or form, you know the deal. Like, subscribe, share. If you need access to our Discord, if you need access to our indicator, if you need access to our trade ideas, both equity and options, we do some spreads and futures as well. You can find all of that information on BitDoctor.org. And last but not least, wherever you're in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.